The gold prices, let's start with that, are holding steady on the back of dovish comments from the Federal Reserve. The Fed on Wednesday said that the bank will continue to support the U.S. economy, but gave no indication of an imminent end to its bond buying program, which has supported the metal's appeal. You have seen the gold prices gain up by more than 7% for the month of July, recording its best monthly gain since Jan 2012. On your screens, 0.25% of a rise coming in for the commodity. The crude oil prices also have gained on back of better than expected U.S. economic growth for the second quarter of 2013. What also supported the prices was the U.S. inventories in Cushing, which are at a 15-month lows. The crude prices have gained 8.5% for the month of July, putting in a best monthly gain since August 2012. Joining us on the show is Jonathan Bharat, who is Chief Economist and Editor, Bharat's Bulletin, and John Driscoll is MD, JTD Energy Services. Jonathan, hi. Let's start with you first. And what's the impact that you see for slower growing China? What does that mean for the commodities, and how are you advising the clients' positioning?
When you look at exactly what's happening in China, we can see that the market really wants to see a slowdown. I think that's what we're seeing. When you look at what the CCP has announced in terms of policy, basically we should continue to see a slowdown. Now, what that should mean to commodities overall, particularly the primary import markets, is we should see prices relatively stable, if not starting to remain in a lower trend.
Jonathan, what's your sense coming in for the gold prices, which seem to be holding gains, but 1350 is a level that has been resistant?
Well, that was quite interesting because, when you look at what the Fed said last night, it continued to give us this dovish tone towards the market. I think whilst they present the bond buying program, and remember, we've got a long way to go in terms of the economy before they actually stop. So I actually think that gold is pretty much undervalued at these levels, because if you continue to think $85 billion a month is going into the market, that form of stimulus must create some form of reaction. And I think at the moment the US dollar has been weak. I think it'll probably, after a small correction, remain weak, and as a result of that, gold, I think, will remain relatively well bid. 1350, I feel, is certainly on the cards. We are actually long the metal, looking for 1375 and then 1400 over the coming month.
Also, the crude prices, while they have seen a good day today, more than 1.5% on the higher side, but it's the high U.S. output which continues to be a concern putting onto the prices. How would you look at the U.S. supplies and the crude prices put together?
Well, I think crude's been quite interesting. I really look at where the US economy is going. It was quite interesting to see the GDP numbers last night, where they came in a little bit above expectations, and we saw crude have a little bit of a bounce. But I do think that's probably temporary. I continue to see the crude anywhere above 105 to 108 is quite expensive. I just actually feel the fundamentals at the moment aren't there. The economic data from around the world certainly doesn't suggest that we should be at these levels. And I think when you start to see concerns in the Middle East start to ease, mixed economic numbers, then I think you see crude should be soft. We're actually feeling that prices are expensive. Would like to see it travel back to that US 100, if not lower, over the coming months.
Jonathan, a final question then. What's your sense coming in for the copper prices as well? They have put the month of July on positive, but August, how is that looking?
Copper, I think it's right, and copper's been interesting because it's been trading this range for quite some time. Now, when I look at the LME prices, 6,500 is very critical, just like 300 is on the COMEX contract. So if I see a break below those areas, I'm going to get quite bearish. But if it holds, then hopefully we'll see prices higher. But given the outlook that we're seeing from China, and as we know, China consumes 40% of the global copper, that if these policies start to take hold, then we could see a break of that 6,500, and I think prices will start to trend lower.
Jonathan Bharat, thank you so much for joining us with your cues there. Let's get in John as well. And John, what's your sense on the crude prices now? They're off their 16-month highs, but we have seen a strong month for the month of July. Do you think the prices perhaps would consolidate at these current levels now?
Well, I think the geopolitical events have been a key driver. You've had isolated supply disruptions that have underpinned the market and supported prices, and that lends some impetus to it, to the market direction. Also, the phenomenal rebound in WTI prices. You know, for the first time in years, we've seen WTI back to parity with Brent and even vaulting over the Brent price. So that caught markets by surprise. But I don't think it was a case of too much too soon. I think it was a response to geopolitical events. It met some resistance, I think, as we got to 110. A lot of the technical analysts, will say we met resistance at the Fibonacci 50% retracement level. Whatever reason you want to subscribe to for the what appears to be a short-term correction in prices, what I find more convincing is doubts about the pace of Chinese growth. This has been going on for, I think, a couple of months.
Just putting that point yet again, John, the premium between NYMEX and Brent is back. Do you see it widening going further?
I think at some point you're going to see a retreat to a more normalized differential where Brent will maintain a premium. I think Brent overall is a better barometer of global economic mood on the price of oil. Brent is a waterborne benchmark, one-day sailing time from the major markets of Northwest Europe, Amsterdam, Antwerp, Rotterdam. It tends to reflect more market behavior, where WTI is subject to these constraints. I think the Brent probably reflects moods in Europe and even in China. If there's any kind of moderating of energy demand, you're more likely to see that reflected in the Brent price. So that's why you've seen this short-term narrowing here. But I think it's starting to move on to what's a more normalized differential. And I expect we're going to see it $3 to $5 a barrel in that kind of range for the next few weeks.
All right, fair point, John. We'll let you go at that. So that's the view really coming in from JTD Energy Services. They feel that the prices may see some more strength going forward. Let's also get in then Vijay Bamwani and Chirag Khubani they are joining us in the studios live. Chirag, hi, welcome. What's your sense really coming in for the energy space now? Because today has been a good day, 1.5% of a rebound coming in. Do you see it staying?
At this point of time in the domestic market, it is at the fresh lifetime highs. Till the time prices are continuing that from, I'm expecting a short squeeze coming up in the prices. If prices are once able to sustain above the important level of 6510, then a short squeeze can take prices higher till 6600 or 6640 in the short to medium term. On the downside, immediate support is at 6450. Once that is taken out on the downside, again a double top kind of position would be formed on the charts, and again downside target till 6300 would be open. So at this point of time, it's in a no trade zone. One has to keep an eye on where it's moving in the short term. Above 6510 fresh longs can be taken, or wait for break of 6450 and fresh shorts can be taken on the downside.
Vijay, what's your sense now coming in for the natural gas prices? Because yesterday you mentioned 214, 215 is the level to watch out for.
You're right, Manisha. We are at the lower end of the trading band. I talked about 208, give or take a rupee or two here and there. So we are trading at 208 right now. If 208 holds, there is a probability of a bounce to the 212, 214 odd levels. But if 208 is violated, and that too pretty forcefully, my guess is 204 is round the corner. It can happen pretty soon.
Let's take a look at the gold and silver prices then. And yesterday was no event coming in from the Fed, but the point that the inflation is below 2% is something that really didn't take the gold prices much higher. Chirag, how would you look at the Indian prices though?
So if we look at the domestic prices yesterday made a key important reversal bar, bearish engulfing pattern on the daily charts. If the prices are not able to cross this short-term high on the October contract, I would say is 28,600. Then an again downside slide till 27,200 gets opened. So any rise in the October contract coming till the levels of 28,350 to 400 zone, one can look to take fresh shots with a stop loss about 28,600 closing basis. For immediate downside target would be 28,000. Once that is violated on a daily closing basis, prices can move down sharply till the levels of 27,200 again.
What's your sense coming in, Vijay, on silver prices? Because 42,000, while continues to be a stiff level to break on the higher side, the downsides pretty much have been at 40 odd.
You're right, Manisha. The 41,400 level is a level I would watch out for as support. We are very close to that level, about 150, 160 odd rupees. So if silver was to close below 41,400 today, the probability of 40,600 is wide open for tomorrow.
Take a look at the base metal space then, and yesterday was a strong day, and today we have continued to hold on to those kind of levels, if not add too much to that one. Vijay, how would you look at something like a copper or a nickel? Because remember, we have seen a bit of a gain coming back onto that one, but are you buying still?
Copper has seen an interesting upthrust, and it's about 0.75% higher at this point in time. The 428 rupees, give or take a rupee here and there, is where I would expect resistance to come in for the day. Where nickel is concerned, I talked about 845 levels on a closing basis. Should we close above this with the expanded volumes and open interest expansion? Open interest will actually expand because you're looking at a new derivative cycle of August, which is trading from yesterday evening onwards. So more than open interest, I would want volumes to perk up along with price rises. A close above 845 can actually take the price to 854 pretty rapidly, maybe even tomorrow.
Chirag, what are you picking up in the base metal space, and how would you want to trade, especially something like an aluminum, zinc or lead, which have been flat in the day today?
So if you look at all the base metal prices, they have been trading on the higher side after the yesterday US GDP numbers, which were quite strong. The prices are showing strength in the short term. Lead has got support on the downside at 127, 126.50 till the time these prices are being held. I'm expecting the prices to move higher till the level of 129.50. Once that level is taken out, prices can move higher till 132 also in the short term. Zinc is also looking bullish, but I would wait on the zinc charts to cross the level of 111 on closing basis, then take fresh longs over there. Once that is taken out, prices can move higher till 114 to 115 also. Aluminium is pretty range bound. I would be waiting to see some fresh breakouts coming up on the prices over there, then only look at trade over on that prices.
Let's take a look on how the agro-commodities were trading today. Chana prices saw another day of gain on buying interest at lower prices from firm queues on the local market because of the festive season. There have been reports of stockists now starting to buy on hopes of improved demand. Guar seed prices in the meanwhile have continued to track lower. Bearish local markets is something that has been weighing on. Also mounting stocks and higher area under cultivation is another thing that continues to weigh on to that space. The edible oil space, oilseed prices gained as concerns mounted over soybean output due to heavy rainfall in central India and forecast for more rains in the next 3 days. Heavy rainfalls in MP, Maharashtra and Rajasthan can damage soybean crop. At this stage, the crop needs sunshine more than rainfall, but that is really the case, and that's the reason you have seen no more than 1% of a reaction coming in on the higher side for soy oil. Vijay, what's your sense now coming in for the edible oil space? Because we have seen a firm turnaround. It's a third straight day of gains coming in for this space.
Manisha, what you are seeing is the volatility in the rupee along with heavy rainfall that is causing some upthrust in edible oils. Although looking at the medium-term picture, I don't see how this upthrust will actually sustain over a period of time. Because you have ample stocks in crude palm oil in Indonesia and Malaysia. You have demand side compression which is being feared come September, October. So this is a short-term uplift which is keeping prices firm. And ample crop in the US where soya and as well as corn is concerned. So I think corn oil and refined soya oil, I don't think there are too much of supply bottlenecks around. So as long as you are basically holding long positions, existing long positions, you may want to nurse them with trailing stops. But initiating fresh longs, I don't see the risk-reward ratio being very conducive at these levels.
Chirag, what's your sense on soybean and soy oil? What kind of levels are you working with?
See, if you look at the short-term prices, this is a corrective pullback after being in the oversold zone. The corrective pullback in refined soy oil prices can continue higher till the levels of 668. Any pullback to 650 to 650, one can look to take fresh longs for a short-term immediate upside target till 668. Once it breaks the price level of 640 again on the downside, that means the larger downtrend has again restarted and the prices in the medium term could go again lower till 615 to 610. The same is the case with soybean prices. Till the time soybean prices are able to trade above the important level of 2960 and corrective pullback on the upside till 3080 to 3160 can come up. Once it breaks on the downside 2960, then again the downtrend would have been resumed and the lower end prices would be till 2600 in the medium term.
Perhaps a second straight day of RBI's intervention coming into the market. We did see the rupee go all the way down to 60.90, but the closing has come in very flat into the markets there. Just 3 to 4 paisa of a move coming in at this point in time. Vijay, what's your sense coming in? Because the choppiness has continued, but the closing time, while the rupee closes, we have seen some sanity return.
Well, Manisha, you've seen somewhat steady equity market, which has also lent stability to the rupee. And what I am looking out for in terms of levels is a support at 60.20 in the currency derivative segment in the August future series. And I think the dollar is likely to get some support here, barring any fresh developments from overseas. 60.20 would invite intraday players to go long on the USD INR. Conversely, if the dollar was to open firm tomorrow, any trade above 61.25, 61.30 will trigger a fresh round of rallies, which could on an intraday basis see 61.70 levels. So I think the long dollar short rupee trade still remains open.
Let's also get in a view from Mr. N.S. Venkatesh. He's Treasury Head, IDBI Bank, and joins us on the Mumbai phone line. Mr. Venkatesh, hi, welcome to the show. What's your sense now coming in for the rupee? Because this week really has been eventful as far as the currency goes. How would you look at the next moves?
I agree. This week has really been an eventful week, and because of the quantitative easing comments from the FOMC, I think some support is there for the rupee that way. And on top of that, today's whatever was the clarificatory circular which had been issued by RBI has also helped rupee regain a little bit of strength. So I believe that maybe the rupee should trade between, let us say, the low today was 60 quarters. So I think maybe the rupee should trade anywhere between, let us say, 59.90 to say around 60 half.
Mr. Venkatesh, all the three central banks, whether it was RBI or ECB today or Fed yesterday, have kept everything unchanged into the markets. Going forward, what does that really tell you? That perhaps all these markets still need to see more recovery or lots of recovery before some stimulus can be curbed?
I believe that since the central banks have all kept their rates unchanged, sort of thing, that itself indicates, and a little bit of a dovish stance, that it itself indicates that going ahead, there is room for maybe making the growth come back onto the table. So that will bring more of the equity flows into the market. So I think that will support both the rupee as well as maybe the bond market.
Mr. Venkatesh, what's your sense coming in from the international markets really? Because while the rupee was closing flat, we've seen the dollar index jump up by 0.75% as we talk to you, 82.03 onto that one. Do you see the strength coming in here is another factor that could pressurize rupee?
Essentially, the dollar had moved up, I do agree, but the GBP also had moved up, the euro also strengthened partially a little bit. So I think overall, if you look at it, I think the rupee weakness story has played out a long time. I think this is the right time for maybe the rupee to actually start strengthening a little bit, though it is contraindicative to what you are seeing from the dollar index. But I personally believe that the pressures from the oil side, those sort of demands may not be there because the month beginning has happened. And at these levels where there is a firm determination from the ministry as well as from the Reserve Bank to ensure that the rupee doesn't weaken further, will maybe make the exporters come back and sell the dollars, which will also support the rupee.
Fair point, Mr. Venkatesh. We'll let you go at that. Thank you so much for joining us. Vijay, you too. Thank you for coming by and giving us strategies on commodities and currencies.